I didn't know what I wanted to do until I was like 30, but I knew I wanted to have a business. Winners lose more than losers. For me, when we lose, when we have failures, I'm like, oh my God, I'm now going to be twice as good because I failed in that one spot.
Matt Putra is a fractional CFO who specializes in transforming cash flow, profitability, and data-driven decision-making, helping ambitious CEOs and investors turn financial complexity into strategic clarity.
Is it a lot of profit with a lower amount of revenue, or is it fast growing revenue with not too much profit? Instead of writing, angles yourself, you can ask Claude to analyze your ICP. What do they care about in September? What are the 3 pain points? For each pain point, what's an ad angle? And you get all this writing and thinking. It just amplifies all that. Payroll of more than 10% or 15% of revenue is always a red flag for me. So Amazon shut down, they lost the buy box, and they ended up losing about 300 grand worth of revenue.
Matt, cash flow is often a pain point for growing brands, right? So what are some of your go-to strategies when you're talking to your client base for improving and managing cash flow?
Improving cash flow.
Hey, everyone out there. My name is Alan, CEO of FreeCashflow.io, and welcome to Profit Powerhouse, the podcast where we sit down with inspiring entrepreneurs to uncover the secret behind their success. We're here to learn what drives their growth, the challenges they overcome, and how they master their finances. Our goal, to help you achieve the same success while maximizing your profit. Let's dive in. Today's guest is someone who knows the numbers behind the most successful e-commerce brands and how to make them work for you. He's the driving force behind Eightx, where he and his team of expert fractional CFOs help e-commerce founders take control of their finances and unlock the kind of profitable growth that turns visions into empires. With a blend of razor-sharp financial modeling, smart fundraising strategies, and real-world operator experience, he's the secret weapon behind brands scaling with clarity and confidence. Whether it's cash flow planning or making data-driven decisions that actually move the needle, he's seen it all and helped founders not just survive, but thrive. Please welcome to the show the man who turned financial chaos into scalable success, Matt Putra. Matt, welcome to the show.
Thank you so much. It's so great to be here, man.
Yeah, Matt, can you share a little bit more about your background? What inspired you to start your business?
I didn't know what I wanted to do until I was like 30, but I knew I wanted to have a business. And then I'll spare you the longer story, but I was in a job that wasn't going anywhere. And at 28, my wife got pregnant with my first son, and I was like, oh shit, I'm going nowhere. Like, let's figure this out. So I went back to school. I picked the hardest degree that I could bear doing, which was accounting and finance, and finished my bachelor's at 30, and then luckily got a job as a VP of finance shortly thereafter. And again, I didn't know what I wanted to do. Well, I knew I loved finance then. I wanted to be a CFO. That was awesome. And then I still didn't know what I was going to do for a business. I just knew I wanted to be the guy in charge, just to try. Like, I knew I could figure this out. So as a CFO with this private equity group, I was working 12 hours a day, commuting 3 hours a day on top of that. Like, it was crazy, right?
Yeah.
A friend just asked me for help with his business. And so I helped him, his e-commerce business, planning cash flows, looking at margins, and they made just a bunch more money. And then their friend was like, hey, can you help me too? And I'm like, yeah, great. And then I did like a workshop for a few of these people, and they were like, oh, wow, this is cool. And so then I was like, well, maybe I can do this as my business, right? So kind of just fell into it, doing something that I really enjoyed. And that was 5 years ago, and we're here today, and I have a team of 25 and so on.
Amazing. What a journey. What a journey, right? It started late, but still end up as successful as anyone else.
I mean, I hope so. It's going pretty well, right?
I mean, it sounds like it went gangbuster even from the start. Is there any early struggles? Our listeners love listening to those, right? Any ups and downs that you've gone through in these last 5 years?
Totally. So I would say the early days, it was really easy to get clients because back then, like on LinkedIn in 2020, there weren't a lot of fractional CFOs on there, or at least not really. So when I went on LinkedIn and I said, hey guys, when you do cash flow, do these 3 things. And when you think about margin, look at these 4 things. And, it was, people were commenting and they would just DM me, oh shit, I need that. Can you help me? And I'm like, yeah. So my close rate was like 50% that first.
Oh, incredible.
Yeah, it was crazy. And it was so easy to get work. And what was hard was, personally, I don't like doing routine things. So preparing the monthly board pack is just not something I like to do, but I like to walk people through it when it's done. So the first struggle that I had was, we now had, I don't know, let's say 5 clients, just me. And the board pack was late a lot because I didn't like doing it. But what I liked doing was getting on the phone and talking about where are we going and how do we get there and here's what's wrong and here how we can do this better and and so they'd be like, hey, where's the reporting? And I'm like, oh shit, right, sorry, I'll get it to you. And so I had to hire an analyst. Was the first person that I hired was an analyst, and they were not very good, and everything was late still. And I was like, this isn't gonna work. Oh no. And then I hired a different analyst. Everything was on time. It was done like perfectly. It was the things I wanted. I didn't know that I wanted. He was doing without asking was amazing. And so then I was like, oh my God, I can do this. So that was probably the first like struggle and win that I had, I think, in the first year.
Right. So making the right hire, right, was a kind of a pivotal moment for your business.
1000%. And it's still the most important thing for us is hiring the right people.
Got it. Yeah. So what is the business model, Matt, that you kind of offer to your client? Is it by a certain package scope, or is it just more customized based on the conversations you're having?
Yeah, so we are very white glove. And what I've learned about us over the years is that we are very good at very hard things. And the way that we do that is we have onboarding plans and we have, like we have a ton of stuff that's templated, but we customize everything to meet the needs of our client. And so what do we offer? Well, there's three options. We do a bit of bookkeeping, not our main thing. With the CFO, you can buy a package. If you're like smaller, let's say 20 million and less, I suggest you pick a package. It's fairly simple. It's weekly meetings, it's a 90-day sprint, it's budgeting, forecasting, the whole thing, right? Dashboards, KPIs, all of that stuff. When you get bigger than that, we sometimes have people that need like a day a week or 2 days a week, and so that's even more customized. So but really there's the two things: package, or you pick a day or 2 days a week if you need a lot of help. And in any case, we end up doing quite well for people. I help people make more money, help people make more margin. And one of the things that we do is we help people spot opportunities that they might not have noticed, and to help them double down and make more money.
Yeah. Speaking of that, Matt, like what is the biggest financial blind spot you see among e-commerce founders, especially early in the growth journey?
The biggest financial blind spot is lack of real-time data, I would say. So, well, bookkeeping too, and you would know this. People tend not to put a lot of effort into their bookkeeping, but when you do, you just know more about what's going on. So you're intimately familiar with how that looks. But the second one I would say is lack of real time data. So I had a client last October it was, and their 3PL had a labor dispute issue, and they shut down. And when they shut down, nobody noticed for about 2 to 3 weeks. And so their fulfillments dropped off. They didn't catch it, but because they're Amazon, their fulfillments dropped off. So Amazon shut down. They lost the buy box,
Hmm.
and they ended up losing about 300 grand worth of revenue.
Oh,
They were
geez.
bigger. They're doing 1.2 million, 1.5 million a month on Amazon. So they lost 300 grand with the shutdown. Now, if they had real time data and they could spot with either within days or a week of the shutdown of on time fulfillment, they would have flown down there, figured it out, get them back running, and they may have lost only 150 grand, but they lost 300 grand.
That's a big
And
deal.
it's huge, man.
Yeah.
And you think of the margin, it'll be between 90 to 100,000 in margin that they
Yeah.
lost on the bottom line. And it's just because they had a scorecard for financial metrics, but not for operational metrics. And so they didn't see it happen.
Just like that. 100 grand
Just
gone.
like that.
Wow.
Just like, and it's such an easy fix. It would have taken them no more or less time every day or every week in their executive meeting to say financial metrics, forecast EBITDA, margin, ROAS. Oh, and then, there's two more: on time fulfillment, blah, blah, blah. It would have taken them no more extra time.
They just didn't have it. Didn't have it in real
It
time.
just didn't happen. Yeah.
So what you say is when you experience the right time for a brand to bring on a fractional CFO, and how does that differ from hiring like a full time CFO?
Right. So when is the right time to bring on a fractional? I think the right time is when you as an owner are unable to keep juggling all the balls in your head. And even for me too, like I have a controller, right? Because I can't even do it for my own business. So you can look at payroll and you can go, payroll's Thursday, I have this much money coming in, I gotta buy inventory and I gotta pay for ads. And up to a certain point, you can keep it in your head. You really can. When you can't keep it in your head anymore is when you should look for some support. And whether it's a great tax advisor and a bookkeeper, or find the support. And typically, I find the revenue level that makes sense for us is like 2 million or if you're funded or venture funded earlier, you'll notice this as you grow in your business, things will be fine and you can kind of manage everything. And then you'll drop a ball. Oh shit, I missed inventory payment, or like, oh crap, payroll's on Thursday, but I paid something else and now I can't make payroll. So I got to pull in my personal money. Like when those things happen a few times, then it's time to look for fractional CFO.
That makes absolute sense, Matt. I always tell my clients that, if the last thing you think about before you fall asleep is, Uncle Sam and numbers in your head, it's probably time, right? Like as a
That's a
CEO,
good point.
you should be growing your business. You should be focused on how to, make the next big move, right? But all
That's a
you're thinking
good point.
about is taxes and deductions, and yeah, like you said, payroll.
That's a great
That's
point.
a that's fine. Not what CEO should be doing, right? For growing brands.
I'm going to steal that
So
one from you if that's
oh
okay.
yeah, for sure. Take that one.
I
Put it
love
in the
that.
next pitch. So, Matt, cash flow is often a pain point for growing brands. I've seen it myself, right? A lot of time it's tie and overseas shipments, and they're like, I can't even do anything else at this point, right? So, what are some of your go-to strategies when you're talking to your client base for improving and managing cash flow effectively?
If I step way back, improving cash flow is about improving the business as a whole. So obviously, be profitable. Don't expect banks to be there for you right now. You'll know, like in 2022, lending got very tough, and it really hasn't recovered. It has a bit more, but back then you could get money from a Wayflyer or Shopify, whatever, and then you would spend it, and you'd be doing fine, and you'd be near profitable, or maybe not profitable, or maybe just a bit, and then you could get more money if you needed it. Well, you can't really now, and you still can't even after 2022. So you have to have a good business now. You really do. You have to have appropriate fixed costs. You have to have not too many staff. You have to be thinking about AI agents in your company. You have to be
Mm,
thinking about using staff from overseas, And so, yes, so have a good business. Okay, first one. Now, let's say you have a good business or it's almost a good business. How do you manage your cash flow? There's really two ways. The first way is you need a longer term forecast. So let's say it covers the next 12 months or even the year that you're in from January to December, let's say. You should know your revenues, your estimated costs of goods sold, marketing, and all the way down to your profit, right? And you should be profitable. And then you should look at your profit and go, how much in debt payments do I have and how much in inventory do I have? And does my profit will cover the purchasing of those things in the months that need to purchase those things, right? So that's the long range forecast. And when you make a long range forecast, the mistake people usually make is going, well, revenue should be 10% more than last year. But what I want people to do is, yeah, 10% more than last year, sure. But break it down into the drivers. So 10% more than last year means I need to spend this much more on Facebook, which means my estimated CPMs, I'm implying a CPM here. What is my implied CPM? I'm implying a click-through rate here. What is the click-through rate I'm implying? I'm implying a conversion rate. I'm implying this many sessions on my website. Break it down into this funnel. And the reason you do that is not because you're going to do it right, but because when you back the data into this forecast, you'll see what's wrong or you'll see where there's an opportunity. And that allows you to fix things quickly or take advantage of opportunities quickly. Let's say CPMs drop, throw more money in the machine. Let's say your CTR goes up, you can know where to work. Anyway, so there's long range. And then you need to have a short range or 13-week cash flow forecast where it's the next 12 weeks and you're forecasting intimately, like granularly, payrolls this week, supplier payments that week. I got to pay Facebook with my invoice on this day, and have one of those. And if you do those two things, it doesn't guarantee good cash flow, but it guarantees you're paying a lot of attention to it. And if you pay a lot of attention to it, you will naturally work on improving it, I find.
yeah, and what I can guarantee is I think 90% of e-commerce brands out there is not doing any of the things you just said,
I know. Yeah,
right?
totally.
And that's
Yeah.
why they need you, Matt, right? To
Yeah.
help them think
Well,
that
you
way.
too. Yes, of course. Yeah.
Matt, you touched upon this too in your comment. The power of AI right now is prevalent in all industries right now. What have you seen the impact to your own agency versus like your e-commerce brand? What have you been advising them about how they should be using AI in their business?
Yeah. So for us, I would say we are, look, I feel like we're behind, but honestly, I think we're doing pretty well. So at any given time, we have multiple agents doing things, right? So for example, all of our phone calls are recorded, and the beauty, of that is, I knew 2 years ago AI would be important, so we started recording our calls 2 years ago. So now I have a repository of 8.5 million words of
Wow.
my words, where I have an agent that can think like me because we have this store of knowledge of me. So it can answer questions to my team. It can write blogs, like all these kind of things, right? So that's one thing. Every phone call I'm on goes through an agent that is a client success agent. So it analyzes the call. How does the client sound? Do they need extra support? Are they happy? Are they not happy? Might they be unhappy 2-3 weeks from now? So we, understand these things. We have workflows about blogging. We have workflows about social posts. We have workflows about we have a podcast too. So we have agents writing show notes and things like that for us. I'm building an AI HR person right now.
Oh.
So it will review our weekly timesheets. It'll review people's HR profiles. Do they need a performance review this month? What was it last month? So we have a ton of stuff that we're building right now. And in terms of the ecom brands, I would say what I have seen, probably the most important thing I've seen is creative velocity. So it's not perfect out there. Icon is a great software, but I met a guy about a month ago and he grew from 0 to 15 million profitably in 2 years. The guy had 800 ads live in his Meta library account.
That's quite a lot.
800 different, yeah, it's massive. And this is the new arbitrage, is creative velocity. Can you make lots of creative? Can you write, instead of writing, angles yourself, you can ask Claude to analyze your ICP. What do they care about in September? What are the 3 pain points? For each pain point, what's an ad angle? And you get all this writing and thinking. It just amplifies all that. So then, make lots of creative. I'm saying that as a really big one. And then, of course, things like anything that has to do with writing or copying and pasting or low-level thinking, agents can do. And honestly, with some of the new models like O3 Pro, that can do heavy thinking and very creative. We're seeing a lot of good stuff come out of that.
Got it. Yeah, Matt. On a side note, there's this fear that as this AI revolution takes over and AI agent becomes more and more smart, it's gonna start replacing a lot of jobs, right, in the marketplace. Do you see that as a trend, even for your own agency going forward?
There are 2 camps. I'm not totally sure where I sit, but there are really smart people that think most jobs will be gone in 3 to 5 years.
Yeah.
And then some people think we'll just all have a UBI and we'll just chill and recreate and spend time with our
Create.
family. I don't know. I mean, I think 5 years is probably too soon, but I would say that, bookkeepers, there won't be bookkeepers in maybe 5 years, but definitely not 10, not at the pace of change today. Will there be CFOs? I mean, oh my God, there'll be people managing teams of agents, but again, like O3 Pro can do pretty heavy thinking. And I think it's just, there will probably be CFOs, but maybe not for in 15, I don't know. But the question is, when the jobs are gone, what happens? Are we going to get UBI or are we not? And I imagine we will. So I think people don't need to worry as much as they think they should. But yeah, I think a lot of jobs won't be here for sure.
Yeah, I don't know if you saw Matt, but Microsoft came out with a study, right, of the top 10 jobs most at risk,
I
right? And
saw,
they're like,
yes.
oh, cool, yeah, and then top 10 job like most like unaffected by it, right? All of those are like kind of like tradesman jobs, right? Where hey, you're a welder or you're a plumber, like how is AI going to replace that currently,
Yeah,
right?
100%.
But
Yep.
then I was glad to see like bookkeepers, CFOs, they were not on at least the top 10 list of jobs most likely to
No,
be replaced.
no,
So we have
but
some
I think
value.
bookkeeping is not going to be. I don't. If I had to guess, I'm actively trying to have teams of agent bookkeepers. So we're working on that right now, and we're not the smartest in the bunch either. There are smart people doing this, but IBM, I heard recently laid off 8,000 people and replaced them with HR agents. So guys, it's coming, and
Yeah.
you gotta. There was another company called maybe it was Loom. I don't remember, but they said we have all these job listings available. If you can build agentic workflows, you can apply for any job you want and you'll probably get it. So it doesn't matter what role, doesn't matter what industry, doesn't matter what team. If you can build workflows, apply for any job you want. So this is what's going to be happening.
Yeah, it's pretty insane right now, right? Yeah. Cool. Yeah. So Matt, to pivot away from that doomsday, can you kind of help give us a little guidance on the founder mindset? So let me explain that, right? From when I talk to a lot of founders and CEO types, they're very much focused on growth, right? The top line growth, right? They're like, hey, this is what people want to see. If I go into a M&A deal, they want to see year over year growth, top line, right? While like me as a CPA, I'm like, well, what is your bottom line? Like, I know it looks good on a screenshot that you can send to friends. Like, yeah, look, I made 3 million top line this year, but
Yeah.
what's your OpEx, right? What are you spending? Your
Yeah.
margin's healthy, right? How do you balance that tension sometimes in conversations with founders? Like, where they're like, hey, I need to grow this top line. You're like, I think you need to make sure your profitability is there, at the end of the day. Is there a right trade off at different stages?
I do believe in making strategic trade offs. Yes. Okay. So I have a client. and we were trying to decide what level of profitability makes sense for us versus putting it back into growth.
Mm-hmm.
And for them, they're in a position where the founder's been doing it for quite a while. They're doing 8 figures and they want to exit. And so, what creates more value when you exit? Is it a lot of profit with a lower amount of revenue, or is it fast growing revenue with not too much profit?
Mm-hmm.
Because
That's a
this
great
is,
question.
and
Yeah.
you'll, because you do M&A, you absolutely know what I'm
Mm-hmm.
talking about.
Yeah.
Let's say you're doing 15 million every year and you're making 10% EBITDA, but it's been 15 million and then it's been like just 2% growth every year.
Right.
Well, that creates one multiple on profit.
Yeah.
But what if you're doing 15, 17, 19, 20, or what if your trajectory was, let's say before you go 8, 10, 12, that is growth. And again, I don't need to tell you, but for your listeners, like the people who are buying your company want to know how fast they're going to get their money back, right? And so if your revenue is not growing and profit's not really growing a lot, it'll take longer. But if revenue is growing 20% every single year and profit might be small, but that means as revenue grows, the velocity of their payback is faster. So then they will pay more for that
Mm-hmm.
sometimes.
Yeah.
So this is the trade-off. And what we believe for this company, they're a consumer packaged goods company, is that we want revenue to start growing on a like 20% a year basis. And we should be willing to give up some profit points for that. And that's their case. Now, if you run a lifestyle business and you just wanted to fund your lifestyle, we have a client that makes 40% EBITDA and revenue's not growing that much, but they make fucking 7 figures a
Yeah. They
year.
make bank, right?
They make bank. So,
Yeah.
and they go to Mykonos every year. They have multiple houses. They have so they don't need revenue to grow because it doesn't fucking matter for them, right? So
Yeah.
you get all
I think
sides.
it
I
comes
think
down to the kind of like the goal of the brand, right? Are you looking to sell in the three to
that's
five
that's
year
it.
range, right? Or are you looking
Yeah.
to basically just fund your own lifestyle, right? And you're not looking, you're looking to keep the brand as a family brand, if you will, pass it down generation to generation, right? Then that bottom line
Yeah.
becomes much more
Great
important,
point.
right? Because that's how you get
That's
generational
a
wealth.
really great point.
Yeah.
And I should have said it that way, but you summarized it, which is what is the goal of the owners,
Yeah. Yeah.
and set it up to achieve what you want to do.
Yeah, because I think sometimes I get on calls and they're like, I want it all. I'm like, well, you can't have it all. There's trade offs. You know, right?
Totally.
You got one thing or another. Are you looking to sell and then go and grow a different brand or retire early, right? What is your goal, right? Are you that's where the tax planning comes in too, right? It's like depending on your vision, we can defer things out, right? Most of the time, right? But sometimes you might not want to do that. It really depends on what you're looking for.
Can I ask you, when you think of the goal setting and the M&A and the tax planning, like what's your process? I mean, I don't know if I'm allowed to ask you questions too, but
No,
what's
it's
your
fine.
process to kind of figure out and help them, plan appropriately?
Yeah, so like when we're like on calls with potential clients, that's usually the first three questions I ask them, right? What are you looking at to get out of this business and brand you're in, right? What is your family's goal? What is your time horizon, right? Sometimes, they start early, they're in their 20s and like, yeah, you're talking to me about retirement. I don't see that going on until like another 20, 30 years. I'm like, oh, okay, cool. But sometimes when I talk to these guys, they're like, yeah, I'm looking to, go mountain surfing when I'm like 30 or just, retire in Bali when I'm 30. How do I get there?
Mm,
Right.
mm,
Those are two very different like mindsets and perspective, despite the age. Right. But then there are more like, founders who are in their 40s and 50s that come to us that says, I just want to find a way out. Right. I don't know how that is. And, how you can get me the most money and from aggregators, right? That like, how do I make my last 24, 18 months look the best, right? So that I can get the highest
cool.
multiple, right? Then I'm like, okay, I see, right? So we should probably not put a lot of deductions on your book right now if that's what you're trying to ultimately achieve. But
I
yet,
see.
but I'd have warned them, like, if they do a good job in due diligence, they'll ask those questions. How much tax liability do you have out there? Do you owe any state any money, right? What does your compliance framework look like, right? So I'm like, in one way or another, they will find out either it's on book or off book, right? So in a way, you might as well just make everything visible so they don't have to dig as far, right, and deep into the picture. So um, we always frame it as a goal setting, right? How can I help you achieve your goal? Right. That's the first thing we ask, right? And then we package around it, right? Like this is the kind of bookkeeping support you need. This is the kind of tax support you need, right?
Cool.
Yeah. So we always package that way. Set your goals, and we'll see how we can be a great financial partner to help you meet that.
I like that. And when someone's looking at exiting, are you trying to start working with them you mentioned 24 months before they want to exit, so you can help them have the best presentation at the time of exit, right? Yeah, got it.
Yeah, we would love that, Matt. But a lot of times they come to us saying, "Hey, I have nothing done the last 5 years. Not like I've been
Oh
writing down
shit.
things, I'm posting notes, and I have a meeting next week with investors, and they want numbers." I'm like, "Yeah, good luck with that. We love to get you started, but we're gonna need at least 6 months to go clean up, right? Like at least to
Okay.
get you to the right place here." And they're like, "Wait, that's way too slow." I'm like, "Okay." I was like, "I'm happy if you ask around." Maybe at some point, like you said, Matt, maybe AI can take over, and these like procrastinating founders, like, hey, I found a way to make it done. I'm like, but not today. Like, I don't think they get it done to today. It's not good enough today.
That's too funny. Got you.
Yeah. Speaking of which, like, I know you love to dig deep into like financials of companies, right? Any like immediate red flags that you see when you're reviewing like companies bookkeeping and financial that you're like, trouble's ahead for you guys.
Yep. Um, Payroll of more than 10% or 15% of revenue is always a red flag for me. And now this is for if you're for an e-com or CPG like brand, right? Not if you're an agency. But if payroll is more than 50%, 15, you have
Mhm.
to fix that. And ideally it should be less than 10. Then I would say your contribution margin, and contribution margin is revenue, less cost of goods, less shipping, less payment processing, less all the variable stuff, and less ad spend. That should be above 20%, but it also shouldn't be higher than 35%. If it's higher than 35%, you're leaving too much money on the table and someone else is going to buy your customers from you right off from under your nose. So those are two big ones. I would also say if you only have one revenue spike in a year at Black Friday, also a problem. If you can't find a way to connect with your customers outside of Black Friday only, you're just not going to survive for very much longer. Not in today's climate. You have to have multiple spikes in a year. Whether it's spring, whether it's back to school, whether it's Mother's Day, like you just need to be able to connect with people more than Black Friday. Again, in today's world, in ecom, if your margins are less than 70%, you are going to be fighting uphill forever. It's just so hard. And so if you're doing ecom and it's 50%, it's just going to be so hard. If you're wholesale, it's okay. It can be okay, right? If you're CPG, you sell the grocery, 50 is okay. 60 is better, but 50 is okay. But if it's ecom, man, you're going to be fighting just to survive all the time with margins less than 70%. So those are the three big ones for me.
No, no, those are great points, right? We've seen a lot of clients with like seasonal products in our times, and they're like, "Yeah, we're only good in the summer because we sell like mosquito repellent,
Yeah.
right?" And we're like, "What are you gonna do the rest of the year? You're just gonna like tread water until you get there?" I just like, okay, maybe not. Yeah. So, what they end up doing is like they start expanding more internationally, so they start finding more the warmer weathers in those countries. And so I was like, oh yeah, yeah, that totally makes sense, right? Because you can't just have a 3 month business,
I
thriving
don't think
business.
so. I mean, unless you're agentic, you know, not everyone's all the way there yet,
Yeah.
but maybe then. But you know what? If you have a 3 month business, go license your product to somebody or go sell the IP, like don't fight that fight. Just go cash in and do something that's going to be all year round.
Got it. Yeah. So, Matt, I would like to ask you a fun question before we get into the more financial management aspect of the show. So, if one day a rocket ship landed at your door, right, and inside contains basically unlimited wealth, like $1 billion, let's just call it, right? That
Okay.
sounds unlimited to me, but maybe not to you.
No, it does. Yeah, it does.
Okay. What would be the three things you want to do with that money?
Oh, geez. Oh, man. I don't know. Let me think.
And the thing is, the money's disappeared in a month's time.
Oh, the money
Don't Yeah. So
disappears.
you can't just like, oh, I'm be boring like a CPA. Like I'm just gonna invest it, and eat the interest off it, right? You have
So
to spend it.
if I
You have to spend it.
had to
You have to
spend
spend
it,
it. Yeah.
if
You
I
can't just
had to
save it.
spend it,
Yeah, and then just eat the interest off. I adopt that.
I would buy one of those year-long unlimited flight packages for each one of
Oh,
my family
cool.
members.
Oh, nice,
Yeah,
nice.
I think they're like 100 grand or some shit like that. But I would buy one of those right away. So that's 600 grand only,
Awesome.
right?
No, that's a great one. Still have 980 million dollars to go, probably.
Oh, interesting point. I hadn't thought about that. But I would buy a house. I think we love our home, but I would buy a bigger house again if I have to use it, right?
Yeah,
A
yeah,
month.
of course, of course.
And then number three, I would think I would donate a shit ton of money to a bunch of different charities. Like if the money's gone in 30 days, let's give it away. Like I would try to find the charities that don't have really, really high overheads so that where the money goes directly to the people that need it, I think is what I would try to do. but but we love traveling, right? So we
Mhm.
we as much as we can. And I mean, the house would be cool. I've always wanted a 2-level library.
To the whole
But
library, really, really cool.
yeah, but then I would give it away. I mean, what else am I going to do, right? I don't think
Yeah, it
I
just
don't need
like
all that money.
I thought about this scenario a lot of other guests, and there's like, man, this is actually a lot of money I need to spend, right? But if you're talking about folks with like billionaire status, that's probably something they never have to think about, right? Every day, but they just have that much cash.
If you can't invest it, you have to use it.
Well, thank you for stimulating the economy, right? One way or another, right? with the rocket ship money. uh, cool. Yeah, Mac, thank appreciate it. So we would love to talk a little bit more about the financial management side of things, right? So a lot of companies that come on the show, you know, we learn a lot from them, right? About how they keep their business in the long term viewpoint, right? How do they keep them growing? How do they keep them healthy and not crash and burn out? So how do you approach? I mean, you would know better than anyone else we had on the show before, right? How do you approach the managing the financial side of business, even though you guys are a CFO agency?
So look, I would say I need a controller. Like as good as I am, I need a controller because at the end of the day, like I'm tired. I don't want to do my own finances, right? So I need the support. I need the help. I need the accountability to stay on track. So get accountability, work with somebody that knows all the things and keeps you on track. And then the biggest couple of things are know where you're going and make a financial plan to get there. And then you have to put guardrails in place. So if you think about a car, you have your map and you know the destination, or Google does now, but whatever. And then some roads have guardrails, so you can't keeps you on the road.
Right.
To me, those are a vision and a long-term financial plan. So whether it's 3-year financial plan, whatever it is to get there, and then it's guardrails, meaning your scorecards, your daily KPIs, your really those couple things, right? It's like, you know, a good example for this week, we do marketing, we do paid advertising, and we noticed our CPMs went up, and we noticed our CTRs went down, but our leads were higher, and but actually we spent less, and so we're like, oh,
Hmm.
what the fuck does that mean? But we noticed it right away because we have scorecards, right? So we noticed it right away. We sent a question to our agency and they're chopping it up and figuring it out right now. And what we realized is that we turned off one type of advertisement and the Facebook algo is learning who we want. So we turn off one and our CPM goes up, but our click-through rate goes down and the cost per lead goes up, but we're getting the right people in the door. So the answer is a good answer in this case. But if it was bad, I still knew about it very, very quickly because we have the guardrail in place, right? But we measure things like employee NPS. We measure things like number of leads. We look at task completion. We look at employee utilization. We look at all these things to keep us on the path. And we know we've mapped the guardrails to the long term vision, so we have a way to keep going. Yeah.
Yeah, it sounds like now you live by exactly what you guys advise your clients, right?
Should we try
Keep a
to?
scorecard, have real time data, right? So then you guys know as
Yeah,
an agency where you are, and that marketing was a great example, right? The lead,
yeah.
but that was good news, right? That's a dream
Yeah, it
actually,
happened
right?
to be good news,
Yeah,
but
for
if it
cost
was
to go
bad,
down, you guys just get more leads in the door
we
anyway.
caught it right away, right? Yeah.
Sounds like you guys have a great controller in place. What any tax or financial manager advice you have gotten working with your accounting and finance team over the years that you would like to share with the audience?
Good question. I haven't had to worry too much about tax just yet. So we're not massive and we're now getting to the point where we're fairly profitable. But I guess, oh, you know what? We do have a trust. We have a family trust.
Hmm.
And what a trust is, I'll try to explain it and you can fill in where I'm wrong, right? A trust is an entity where it owns my business and the income will pass through the trust and it can land on myself, my wife, or my kids. Now, in Canada, when my kids are too young to get income yet, so they'll get taxed really inefficiently. But later on, when I sell my business, we can split the proceeds between a bunch of us and pay less tax when we sell. And there's a few other reasons for doing it. And so we have a trust because I anticipate this going very well. And so we have in place a way to manage tax effectively later. I could also pay my kids a salary and they could pay me rent and then I can get, things like that. But the trust enables a lot of that. So I know I probably didn't get
No,
it all right.
that's a great explanation, right? So like for what we tell our clients, like a trust is like almost like a living will, right? Like you're not just doing last minute planning of who you're gonna split your inheritance or your money with, right? At the last second, you're doing it throughout your life, right? You're
Hmm.
planning year by year how you're gonna manage that trust and manage it effectively as your lifestyle changes, right?
Yeah,
So
that's a good point.
you're much more ahead as I would expect, right, from a fractional CFO firm. A lot of people out there who, when we give this advice to, they're like, I don't need it now. They figure like they just this is a conversation for a long way away.
For by way of reference, in Canada, for using a trust, I will get $6 million tax-free on exit
Mm,
because I use a trust.
yeah.
If I didn't do that, I would get him $1 million tax-free on exit. So we're talking about roughly $3 million of tax savings for using a trust.
Incredible, right? Incredible. That right there is the reason why people should be hopping on this much earlier in the life cycle.
And the thing is, so you'll know this as well, but I set the trust up when my business wasn't worth anything. So I didn't have to pay any taxes to transfer it all into a trust. If I waited until the next couple of years, I would have to do a whole bunch more planning and maybe even some payments to transfer everything to the trust. So for doing it early, like it cost me 5 grand. But if I did it 2 years from now, it would have cost me 50 grand, 60 grand to set it up.
Yeah, you're basically a living model of why people should do trust nice and early, right? And not wait
Yeah,
too long
yeah,
before their business
yeah,
get super profitable and it's such a more complex, right, setup for their trust.
100%.
Great, Matt. So what's next for you and your business? Any exciting plans or projects on the horizon for the next year?
Yes, yes, there are. Like I say, we are really working on being agent supported business, I guess. We are working on bringing the cost of bookkeeping and some of the analysis stuff down. We are hiring a marketing manager right now because again, things are going fairly well. So we're gonna keep growing. We're gonna hire a sales manager hopefully in the next quarter. We are looking at working in the SaaS industry a bit more than we do today. We're looking at doing a model where people can work with the fractional CFO, but have me fly out to do their strategic planning with them once a quarter. Yeah, there's a bunch of really cool stuff I'm excited about, and I love this business.
Very exciting, and that just more business meal and business travel expense for your business,
100% more
right?
travel,
Gotta keep
and
those on track,
yeah,
right?
and I get to bring my kids with me. So now that they're getting older, I bring my kids on most business trips sometimes,
Yeah,
and so we get to
you can
travel the
always use
world.
the sandwich method, right? To have business at the beginning and end, and have the fun in the middle.
100%, yeah.
Yeah. Great. Yeah. So we're at this segment right now, Matt, where we talk about final advice, right? If you can give one piece of advice to someone just starting the entrepreneurial journey, someone who's still stuck on their couch, not sure what they should be doing, listening to this podcast right now, saying, how can I ever be like a Matt, right? How can I ever start a fractional CFO agency firm? What is one, two, or three simple steps you can advise them on how they can get started and really start complaining about life and take action?
Everyone will have heard this from Alex Hormozy and others, Dan Martell and people like that. But my unlock was to just start. So don't overthink it. Try pick something that you're half decent at doing, or even just that you like doing, and go sell it to the first person. Call up your friends and say, "Hey, I do this thing. Do you need that?" And they all say this, so I know this is repetitive. But for me, there was a few things I tried before Fractional CFO, and all those things that I tried and maybe didn't work enabled me just to get a bit closer in that journey. So I tried like vehicle wrapping. I mean, didn't get off the ground. I tried window. I was gonna do like window tinting and in for homes, but it's just pick anything and just go try to sell it to somebody. You will be terrible at it, but they'll pay you a little bit of money. Like my first client paid me $500 a month. I have clients now that pay me $20,000 US a month. So start off cheap, even do it for free, but get a testimonial. And then what will happen is you'll do it. It'll not be very good, and then they might be upset with you even, but you'll do better. And then the next one you'll do better, and the next one you'll do better, and then you might change your service a little bit, and you might add this and add, and you'll just evolve into someone who's successful. And it just takes swinging at the ball, just taking swings and trying stuff. So just start literally anything. You can make money at these days. So yeah.
Yeah, I think a lot of people just are really afraid of failure, right? They think that if they go out there and make some mistakes, that's it, right? They're done, like GG. But that's really the learning blocks, right? That gets them to where they are today, right? Yeah, I like to tell the story sometimes, but like for me, and during the COVID era, I was trying to be an e-commerce founder. I know I don't look like it, right? But I
Oh.
was trying. Everyone was selling. I was like, oh, dropshipping sounds fun. Maybe I can get into it as a
Mhm.
side hustle. So I tried selling all kind of products from China and brought them over and realized I'm really bad at this. But then when I'm like joining all those forums on Facebook when they're talking about it, they're like, "Oh, I made it as an overnight success, but now I'm afraid the IRS might come knocking on my door." That was my turning point when I realized, "Oh, this is where I can help." But now I understand e-commerce, so I can speak their lingo and yet can provide more the financial accounting support, which is what I'm actually good at. Yet I was trying to be like them, but couldn't hack it as well as they do.
But if you hadn't tried that, you might not be where you are now, right?
Absolutely
So
not, right? I wouldn't even have thought about it, right, back then. It
fucking
was like,
fantastic.
yeah. So it's really part of the journey, right? You don't know where that journey is going to take you sometimes, but you got to try, right? I could have just also just sat on my couch and not try to sell a product, right? I didn't do great, but I learned so much along the way about failing. how to fail at it, right? Which in a way is a great lesson in itself. So
Something Dan Martell said or says, and whatever, I heard this recently. He said winners lose more than losers. He probably got that from somebody else too, but I have really taken that to heart. And I coach soccer as well, and I tell my boys, winners lose more than losers. Be willing to try something and lose the ball. For me, when we lose, when we have failures, I am now beginning to get a little bit less stressed about failing, because I'm like, oh my God, I'm now going to be twice as good because I failed in that one spot. It's like when you break a bone, your bone gets stronger than it was before. That is how entrepreneurship is too. And so just know that losing makes you a winner. And if you're just willing to continue losing and failing, you will become unstoppable at some point. I don't think I'm unstoppable yet, but I'm getting there.
yeah, no, sports is always a great example, right? Just like in baseball, like when I see their batting average, I'm like, they're batting 250. That means they miss like seven out of 10 times, and yet,
Yeah, right?
yeah, that's considered success in baseball. Like if you're batting 300, right? You're doing pretty well as a baseball player, right? And yet 7 out of 10 times they at bat, we're like, yeah, they striked out or they ground out or something happened to them.
Well, I'll give you a soccer one. So we all know Cristiano Ronaldo, right? He shoots the ball 10 times. How many times do you think he scores?
Probably like one or two, right? Soccer is very low
Yeah,
scoring.
I
Yeah,
don't know how you do that, but
yeah.
but when I asked my soccer team, I'm like, how many times do you think when he shoots the ball in the net, how many times do you think he scores? They're like seven. Wrong.
Seven.
I,
That'll be
he
incredible.
misses the
70%.
he misses the net like 6 out of 10 times, and when he hits the net, so of the 4 to 10 times he hits the net, he scores like two. So he's scoring 2 out of 10 times.
That
He
that's
misses
that's
the net
that's very
completely
amazing
6
in soccer, right? If you can score 2 out of 10, like 10, two
Yeah,
out of
it's
10, 10,
huge.
yeah.
He's the highest scoring man in soccer ever. And he misses the net 6 of 10 shots, right? So I tell my boys, shoot the damn ball. No one cares if you miss, right? Be brave.
yeah,
Yeah,
yeah. You need attempts, right? If you never attempt, how can you make it, right? It just
exactly.
people see it as a failure, but you see it as a life lesson, and I hope people out there listening can also see it that way, right? So.
Yeah.
Matt, it's been wonderful having you on the show. You brought such great value on the fractional CFO side, and I can see the reason why you have such happy clients. And I'm sure you'll have a lot more after you get through these podcast sessions and really spread the knowledge that you have to folks out
Yeah,
there,
this was so
right?
fun. Thank you
And
so
and
much, Alan.
it's just invaluable. And I hope more brands are kind of perking up their ears and listening. And if they're thinking about numbers as the last thing they sleep, as I said, they should be calling you or making sure they're not doing that anymore. And having Matt on your sideline, and you'll have much better shot attempts and much higher batting average and everything in between.
Well, yeah, but I think you need the both of us, to be honest, because you need me to do some of the forecasting, but you need you to do the tax planning because I don't do that at all. So
very true, very true. Just make sure that we can become a bundle, a combo deal for some of these folks.
yeah, let's do it. That's awesome.
Matt, thank you so much for on the show. Yeah, if you're around in a year's time or give us some updates, we'll love to have you back.
That'd be great. Wonderful.
Cool. Yeah, listeners out there, we'll make sure to have all of Matt's contact information in the show notes. Matt, is there any last giveaway or promo or shout you want to give to the audience before we get off here?
Yes. So by the time this launches, people are going to be very close to Black Friday, I believe, or you should be thinking about it heavily. We want to offer folks a Black Friday guidance system. And what that's going to mean is it's going to be the daily trackers that we give to our clients. And for qualified people, we'll deploy 3 of those for free. And it'll be daily trackers on the scorecard and on KPIs and on profitability for Black Friday. So that during Black Friday, you can monitor to the day and notice if there's opportunities or risks and adjust.
Incredible, Matt. We'll make sure to get all those links in the show note below. And if you guys have listened to this episode at all, you know how important it is to have real-time data in your company, especially around the busiest shopping time of the year. So, Matt, appreciate that offer. Thank you so much for being on Profit Powerhouse.
Thank you so much. This was great.
Everyone out there, thank you for listening. Show notes be below. Peace out.